U.S. President Donald Trump's tariff-induced market mayhem appears to just be getting started.
The Dow Jones down about 620 points.
The Dow plunging 2,200 points, more than 5%.
It could be the third straight day of major losses after President Trump announced sweeping tariffs last week.
It looks like we may be on track to have the worst quarter in real consumer spending since early COVID.
Guys, the crash happened. It's here, and here is my plan for how I'm going to profit. Let me show you. Take early April, just a few days ago as an example. One day, Trump throws out a new 10% tariff. Bam! Stocks crash pre-market. NASDAQ drops 2.5% intraday, then recovers by the close. Who predicted that? No one. Because you can't. Markets are emotional. Markets are chaotic, and at times, just plain stupid. Today, I'm recording this video. It's April 7th. Guys, at 3 o'clock this morning, the NASDAQ's pre-market numbers were down 6%. I started to record a video today at around 9:45. The market at that point was down 5%, the NASDAQ. By the end of my recording, just a mere 20 minutes later, the market had turned around and was at one point up 4%. That was a 9% turnaround in a matter of 20 or 25 minutes. 9%. Guys, no one in the world can predict that. Anyone who says otherwise, I need you to do me a favor. I just need you to ignore them completely because they sound so confident when they say it, but they're absolutely the dumbest people in the world. You will never, ever, and I don't think you ever have heard me say anything about a specific date or time that something would happen. It's impossible. But here is what we do know. There will be bear markets. There will be volatility. There will be crashes. And the longer your timeline, the more of those you're going to experience. Now, if every single time this happens, you panic, you're going to have problems. So I need you to do me a favor. When these things happen, take a deep breath. Unless you need that money in the next 5 years or even shorter, volatility is absolutely your friend. As Morgan Housel says in his great book, Psychology of Money, every past market crash and bear market looks like an opportunity. Every future one looks like a risk. Guys, they're all fucking opportunities. It's all about how you perceive them. And it's all about you react to them in here. Guys, we all know what's smart to do up here. But then we get Mr. Market showing us these stock prices are absurdly low. And we say, well, there's a reason for that. And news follows the stock price. And as the stock falls, as the stock goes from here down to here, when it was up here, it was perfect. When it's down here, look at all the problems. Well, spoiler alert, guys, these problems that are being talked about down here probably existed up here. They just didn't go to the surface because you were stupid to say bad things about a stock that was doing this. And you're dumb to say good things about a stock that are doing this. That's human nature. Now, volatility gives you chances to buy great stocks at great prices. As Peter Lynch always said, nothing's better than a stock that's falling on a company that's fundamentals are getting better. If you dollar cost average in a low cost ETFs at the right valuations during a downturn, it's like buying things on sale. It's the US economy getting better in the long run while you're buying ETFs at very reasonable prices. Now, you're not going to know what's reasonable. What I thought was reasonable 5 years ago is very different than today. If I had known about inflation, all these other things, I would have done things a lot different. But on this channel, we believe in a principle-driven investing approach to buying stocks. In a minute, I'm going to share with you stocks that I've been excited about buying. But before I do, look at this chart. This is the S&P 500. It's one of my favorite charts. A nice smooth line showing the intrinsic value of the S&P 500. Look at this thing. But guys, as you've seen in my other videos, the volatility, you don't see it back here because the market's so low. It is absolutely like this. Absolutely doing this. And look at a fraction of the bad things that have happened since 1950. This is just a fraction, guys. We're talking about terrorist attacks, presidential assassination attempts, presidential assassinations, world wars, all these, not world wars, but the Cold War was a very quiet world war. Anything you can imagine happening has happened, name it. And what happened? Stocks still went up. Why? Because the U.S. economy is getting better. It's important to understand what you're buying it when you buy stocks, whether through an ETF or individual stocks. Guys, I made a video where I started at the beginning of the year and I said, I'm going to pick my own 7 Mag 7 stocks to compete against the Magnificent 7 that has been the hype stocks of the time. I picked Sprouts Farmers Market, Adobe, Nike, Alibaba, Ulta Beauty, Southwest Airlines, and PayPal. Now, let's pick the one that I think has one of the most upside potential to sit there and take a look at, because I want to show you how to analyze the stock. So let's pick Southwest Airlines. The reason I'm picking this one is this is one that's absolutely been battered since COVID. In fact, it's pretty much at COVID prices right now. Now, my thesis on this one is very simple. Go look at their profit margin. Last 5 years, they've averaged a negative 0.6%, and last year was 1.7% profit margin. Before COVID, they consistently did 10 to 15%. I'm a believer that margins mean revert. And I'm a believer that Southwest is one of the best run, actually the best run airline in the world. Until COVID, they never had a losing year. Now, what I can do is I can sit there and make these assumptions, go do my research, and then put it in Stock Analyzer tool. This is why I do this. I have built the Stock Analyzer tool as a discounted cash flow model. It allows me to make assumptions about the future on the stock, put my revenue growth in. For the next whatever number of years, 1 to 20, I pick 10. Profit margin, free cash flow margin, assign a PE at the end, and give it my desired return. Now for here, I put 9% in to give my intrinsic value. What do I think the company's really worth? This Stock Analyzer tool allows us to take the story and the numbers and put them together. Because guys, as Professor Oswath says, a story without numbers is a fairy tale. Numbers without stories is just an Excel sheet. We got to put them together. Now, it doesn't include the balance sheet here, but it allows you to sit there and get a good idea of where we stand. So these are the assumptions I put in. I hit the Analyze button. The stock's currently at $26 a share. This is why I like it. I made conservative assumptions here. I have a low price of 22, high price of 100, middle price of 55. That's a lot of upside potential. And based on discounted cash flow, potentially a 21% return over the next 10 years, including dividends. Guys, I created this channel to sit there and say the things that I believe about investing. I invest in businesses, I invest in real estate, and invest in stocks. And the one thing about all of them is they're all investing. I literally laugh at people who say, oh, I'm only a stock investor. I'm like, listen, if you're an investor, you're an investor. Yes, there are nuances you have to understand, and there are certain areas of expertise you have. But I apply the same principles to business, real estate, and stocks. And those principles, those tenets, are part of my principle-driven investing. These are 5 tenets that I live by for all my investing. And I'm sure over time they're going to change. But right now, these 5 tenets I think are a great framework to have in order to consider yourself an investor. In fact, I have them in my office on a wall to make sure I remember these at all times. So if you're interested in getting an explanation of those 5 tenets to sit there and get yourself into believing and thinking a certain way, click the link below for our free guide on these 5 tenets of principle-driven investing, and it'll be in your email just like that. Also, guys, those 7 stocks I picked before, they're my own personal Magnificent 7. If you want to find out more about them, you have to watch this video. I just picked those 7 stocks, and so far, and it's a short time frame, so I'm not declaring victory, they're absolutely crushing the actual Magnificent 7. These companies are strong with real fundamentals, strong balance sheets, and the kind of long-term upside that gets value investors excited. So click on the next video linked on the screen. Thank you for your time.